Hello and welcome to another episode of Ask NDB Wealth month-end market update for the month of January. My name is Bhyanga Jaisingh and I'm here with Kavisha Yapa, who will be starting off with inflation.
As per the Department of Census and Statistics, inflation in January 2024 spiked to 6.4% from 4% recorded in December 2023. Year-on-year food inflation reached 3.3%, while non-food inflation climbed to 7.9%. This increase is mainly due to domestic price adjustments following VAT hikes and the elimination of VAT exemptions effective January 1, 2024, along with disruptions in food supply chains and the diminishing favorable statistical base effects. Moving on to the external sector, in December 2023, exports dipped by 6.2% to $1 billion compared to the previous year, primarily due to decreased earnings from industrial and mineral exports. Conversely, imports rose by 4.4% to $1.5 billion, partly fueled by relaxed import restrictions. This led to a widening of the trade deficit to $490 million in December compared to $360 million the previous year. However, overall, the total trade deficit for the year 2023 moderated to $4.9 billion from $5.2 billion in 2022. Workers' remittances remained robust, reaching $5.9 billion for 2023, representing a year-on-year growth of 57.5%. Similarly, earnings from tourism picked up over the year by over 82%, with total tourism earnings for the year 2023 amounting to $2 billion. India, Russia, United Kingdom, Germany, and China were the main source countries for tourist arrivals in 2023. The appreciation trend of the exchange rate continued into the new year, with the Sri Lankan rupee appreciating by 2.1% against the US dollar in January 2024. Gross official reserves improved to $4.4 billion by end December 2023. Foreign investments in the government securities market recorded net inflows of $210 million in 2023, despite a net outflow of $23 million in December 2023. Meanwhile, foreign inflows to the Colombo Stock Exchange recorded a net inflow of $18 million in 2023. During the first month of 2024, the equity market witnessed a muted performance with a 3.2% decline in the ASPI and a corresponding 5.6% decline in the S&P SL20 index, essentially due to the impact of tax increments on an already reduced wallet size, as well as the uncertainty surrounding the progress of external debt restructuring and the upcoming election cycle.
Looking at interest rates, in the first monetary policy review of 2024 held on the 22nd of January, the central bank opted to maintain interest rates with the standing deposit rate at 9% and the standing lending rate at 10%. The decision was influenced by factors such as the inflation target of 5% over the medium term and the existing challenges posed by heightened taxation and supply-side constraints, which could potentially exert upward pressure on inflation. Looking at the fixed income market, January saw a significant downturn in treasury bill rates across all three tenors. This was driven by increased demand at the auctions in the backdrop of expectations that increased tax revenue collection may temper government funding requirements in the near term. The benchmark 12-month treasury bill rate declined by 93 basis points to 12%, the 6-month rate fell by 196 basis points to 12.2%, and the 3-month rate declined by 254 basis points to 11.97% compared to December. Additionally, the central bank held two bond auctions in the month, with the initial auction presenting a combined total of $120 billion in 2, 4, and 6-year bonds. The auction successfully allocated the entire quantity for the 2 and the 4-year bonds, but only 86% of the offered amount was subscribed for the 6-year bond. The accepted bonds were at weighted average yields of 13.83%, 14.21%, and 14.22% respectively. The second bond auction, which was held during the last week of January, offered only 40 billion rupees in 2 and 4-year bonds. The auction successfully allocated the entire sum offered. Nevertheless, the rates declined significantly, with the weighted average yields declining by 75 basis points to 13.08 and 56 basis points to 13.65%. Total government revenue for the 11 months ended November 2023 stood at 2.7 trillion rupees, a significant increase of 53% compared to the 2022 figure. Government spending surged by 4.3 trillion rupees for the same period, an increase of 46% compared to 2022. This surge in government spending is explained by the spike in interest rate costs, resulting in an overall budget deficit of 2 trillion rupees, up by 26% for the 11-month period.
Thank you, Vihanga, and thank you for joining another episode of Ask NDB Well.